Hey, welcome back everyone. It is time for another red hot covered call video. Hey look, if you've never been to my channel, you're in for a treat. I post up relevant and timely covered call videos. I show you my trades, we talk about them, so maybe you learn something. That is the mission of this channel. See, I love sharing with you the stories of my success and the strategies that I use. Because for me, 3 years ago, my mentor Jerry sat me down, he showed me the way. And I'll tell you what, ever since he sat me down, mentored me, coached me in this strategy, I have been knocking down the profits. And as you can see on my website right there, it has been a journey of success. And if you've been watching my channel, you know that I haven't had many bad trades. Now, I'm not perfect, but look, for the most part, man, of the 600 and 700 trades that I've done in the past 3 years, only a mere handful have been losers. And coming from a swing trader, day trader mentality, when I tried to do that and be profitable, man, I'm gonna tell you right now, it is night and day the success that you could have with this strategy. Now look, this is the covered call writing, cash secure put strategy, investment strategy is one that sometimes can be confusing. What we look to do here is demystify that by showing you my trades. We talk about them, so maybe you learn something straight talk style. Now what does that mean? On this channel, I don't like to use all the highfalutin lingo that you will hear all of the other covered call gurus use in their videos. I'll give you a perfect example. An option is priced in two ways. It has intrinsic value and extrinsic value. Now, if you're new to this strategy, you're sitting there thinking, well, I think I know what intrinsic value means, but what the hell does extrinsic value mean? And has anybody ever used that in a sentence? Well, I try to break it down straight talk style. So for me, you'll always hear me say things like, hey, our option had real money and time value. So again, I try to bring it to you straight talk style. So if you don't like that or you don't understand that, then hey, look, this channel is not for you. Now look, before we get going, I want to say thank you for hitting that subscribe button. We're getting close to 4,000 subscribers, and I'll tell you, absolutely blows my mind that you come back every single week watching my videos. There was a time that I would consider a video successful if in a week I got 100 views. And hell, if I got 10 likes, absolutely loved it. These days, man, I get 1,000 views a week. I get over 100 likes. It's all because of you. That motivates me to do the next red hot cover call video. And I tell you, it really is just that simple. So look, keep coming back, keep watching, keep banging that like button, and keep commenting. You know, last week I'm watching other cover call gurus and all their videos and this, that, and the other, and I noticed something. See, as I release a video, I'll spend a lot of time answering the comments. And literally, I'll get 10 comments, 20 comments, 30 comments. I go to their videos, nobody comments. I mean, there's no comments. And then when I comment, I don't get a reply. So for me, it just confirms what I've thought the entire time. When I bring it to you straight talk style, when I bring it down to earth, right? I'm going to get more engagement from you, and you are going to start feeling more comfortable. And when you feel more comfortable, you might do it, because ultimately, the reason I'm doing this is to pay it forward from my mentor, Jerry. And by the way, if you haven't seen my video with Jerry and our story, it's on my website. It's right here. In fact, it's only 6 minutes long, and it would be absolutely cool if you went there and watched it. You need to understand, I do this with a purpose. Now look, before we get going, because I have an absolute great video for you, we're going to talk about how to supercharge your monthly covered call returns. But look, what I want you to do, I want you to go to my website, CTP Dashboard. See where I have the podcast link? I am uploading unedited car session videos as podcasts. I know a lot of you just want to hear it, right? You're traveling, you're on the road. So what I do is I do Ask John Covered Call Car Session Podcast, where I just get on the mic, unedited, I just share with you my stories, and we talk covered calls. Now, I'm going to post a great conversation about how I had some Alibaba shares assigned to me 2 weeks early. It didn't shock me, but it surprised me. Now, yes, Alibaba has fallen from 185 down to 155. In this podcast, I talk about my side of the trade and the other side of the trade. And I know a lot of you like hearing about the other side of the trade, because most people don't talk about the buyer of my cash secure put. Now, before we get going, if you like what you're hearing at the channel, I want you to subscribe to the channel. It's right there and it's free. And hey, look, if you like this video today, I want you to bang that like button. It lets me know you like what I'm doing. So this is one I absolutely had fun with this week. You know, what I love to do is come into the Dividend Dashboard. What I'll do is I'll search for that juicy quarterly dividend where I can buy the stock about 2 weeks early, hold it through the X date, and then hopefully 2 weeks later have my shares taken away. Now, usually it's huge S&P type companies. And I'm going to show you 3M right here. And the one thing that really gets me excited here is I can supercharge my covered call returns because we're going to hold the stock through the X date, obligating the dividend to us. And then 2 weeks later, I'm then going to go ahead and hopefully have my shares taken away higher from a covered call right. So the idea here is I'm going to buy a great S&P type company. I'm going to use the golden rules of covered call writing. I'm going to try to avoid volatility with earnings reports. I'm going to try to collect that fat dividend, right? I want to make sure it's an S&P type company. All the things that come with the golden rules of covered call writing, I'm going to try to adhere to. And last week, 3M checked all the boxes for me. Now, looking at the chart of 3M, I'm going to tell you what, it has scared a lot of people. And in fact, notice this, it was trading at 260X. And then we get the China trade wars. And I'll tell you what, this thing has done nothing but left a ton of bag holders. Now, there's many reasons. Not only the China trade wars, which impacts their business, but I've been watching Squawk in the Street in the morning. And every time Kramer talks about 3M, he's basically put the Heinz Kraft hex on him, the no growth hex. And just like Heinz Kraft that was trading as high as 90 bucks, it's fallen into the 30s. Well, 3M has got the same hex on it, and here we are. It's trading at $166. And the question is, where's support? Do you see a support line here? You might be able to say it's 160, but the only way I'm going to get any sort of support is backing out 5 years. I mean, look at that chart. That's 2 years ago, the last time 3M hit $155, $160. So look at that fall. So one of the golden rules of covered call writing is that we want the chart to tell us a good story, right? We always would love to find those great covered call candidates that trade sideways to higher. Well, in this case, 3M is not. And in fact, it is getting kicked in the nads. And look, support is nowhere to be found. Now, with that said, this $155 support line that's 3 years old, I'm going to go ahead and use this line and feel that with the recent sell-off in the stock market, we might get a little bit of settling here. And the hope is this: if I buy 3M right here at about 167X and I hold it through the X date, I'm going to be able to collect the $1.44 quarterly dividend plus a decent covered call premium. And in this case, that's exactly what I did. I went ahead and bought 3M at 166X. I wrote the 170 covered call, the 30-day covered call. I ended up getting $3 for that. I'm going to hold the stock through the X date, which has already passed. You can see it right there. Look at this. This is going to be a $4.44 supercharged monthly covered call with dividend capture return. This is going to be over 5% in a 30-day window. For me, I absolutely love challenging myself, trying to find those great companies, keeping me motivated with all these little crumbs, right? We always talk about just picking up one crumb after another. We do not try to hit home runs because every time we try to overreach, what happens? You try to overreach on a stock or a play, and inevitably you get kicked in the ribs and you're down. Well, when we pick up those little crumbs and we don't try to overreach, we can have success. We keep the window of the contract about 30 days with the expectation just picking up a little crumb. And this crumb turns out to be a very nice and tidy 5% 30-day trade. Now let me do a real quick recap on this trade as to why I did this trade, right? I show you my trades, we talk about them, so maybe you learn something. Well, what can you learn from this trade? Well, if you're not a technical trader, you may not understand how the charts are speaking to you. And I never profess to be an expert in charts. But when I was looking for support for this falling dog of a stock, I had to back out 5 years just to see the last time it traded down here. Wall Street is going to use this as a support line, and they're going to try to hold that support line for about 3 days. And what does that mean? Well, you could see that there's no support here. That's like a free falling stock. So for example, I always tell you, when you jump into a pool, right? You jump into the deep end. What's one of the first things you want to do? You want to jump to the deep end and try to go to the bottom and come back up so you know where the bottom's at, right? So Wall Street does the same exact thing. They want to trade based on the support line. If we run any sort of Keltner channels or OBV, 3M has fallen out of the bands. It's absolutely getting crushed. But at some point, there has to be support. It's a great S&P type company. I mean, this is one of the biggest global companies in the world with products you'd recognize the minute you saw them in a store. So at some point, there has to be support. Well, over 2 years ago, it hit 155 and headed higher. Headed higher on some great news. Well, that's where Wall Street's going to use that very first support line. Now, for some of those technical traders, they're going to really get tight, right? They're really going to look at a 1 week chart, maybe a couple week chart, a daily chart, right? But for the most part, they're going to back it out to really find the last time it's traded this low. And I'll tell you right here, it's 155X, and we did get a little bit of bounce from that. I think they were buying it up to get the dividend. When I bought 3M at 167X, it still fell on that day to 165X, but the next day it rallied to 169X, and sure enough, they sold it off into X date because it was X dividend. So the stock is now trading at 166X. So when looking at these charts, we really want to look for that uptrending stock. Why? Because as we write those out of the money strikes, the stock goes above the strike price. You have your shares taken away. You make your max profit. We look to do it on the next stock. When you're trying to write covered calls on stocks that are absolutely falling, you don't get that sense of where they're going to rebound, right? And there's more likelihood that it's going to keep falling. Man, this looks like a falling knife. So for me, I had to go back about 2 years. I'm going to use that 155 as a marker. If the markets tail off and this thing starts to peel off, our next marker might be at 150. I can't even imagine it getting back down to below 150, but it's there. It's very possible. Look, I use monthly covered calls with the dividend capture strategy to supercharge my return. If I don't get that dividend, I'm making a $3 premium, which pockets me a little less cash on cash return. But with that fat $1.44 dividend, this play is going to be a very profitable trade, even for all you salty dog covered call writers. Now look, I have found a lot of great, huge S&P type companies that pay fat dividends to do this strategy. I use Chevron, I use 3M, and there's so many more out there. Look, what I want you to do is subscribe to the channel and be a part of what we're doing. Go to Facebook, search CTP Dashboard, and follow the page because I posted this trade up on my Facebook page. Hey, look, I'm going to let you go. If you like this video today, bang that like button. It lets me know you like what I'm doing. And share this video, letting others know we're talking the good word of the covered call. And until next time, I hope all your covered calls are profitable.